Well, let's move on then. Let's focus on the IT space. Ravi Menon, IT and Technology Analyst at Macquarie Group, joins in to run us through his big call on the IT space. Hi, Ravi. Good morning. One school of thought is we have been comparing current valuations with pre-COVID levels. But post-COVID, things have changed. So maybe some of these IT stocks deserve a better multiple. Now, time will tell on that front. But from your standpoint, well, your report suggests that you're quite positive on Midcap IT, particularly Persistent Systems and LTI Mindtree. Run us through the rationale for both those two.
Thanks. So we are positive on the sector overall, right? Because we think that this recession is very different from the GFC. We don't expect spending cuts to happen. We think it will be very minor. And the Indian vendors, for the first time, I think they are positioned as strategic vendors who will benefit from vendor consolidation. I think that's the first two when we are entering a US recession. So I think, if you have a sense of history, this is a little bit different compared to the previous. And that's what we've been saying and why we are positive to the sector overall. Even the smaller firms, I think, are more strategic vendors compared to before.
All right, got that. So that is the premise on which... Sure. The premise is that you're positive on the sector. But just coming to Wipro particularly, any thoughts? Because, it's underperformed for a while. Even this time, it's the lowest amongst peers in terms of a constant currency revenue growth. Would that be on the back burner compared to the other stocks?
So our pecking order in the large caps is HCL Tech first, followed by TCS, then Infosys, and then Wipro, and last Tech Mahindra.
Okay.
All right. Ravi, I wanted to ask you about this LTI Mindtree. That you're positive on that one. What about LTTS? They've gone ahead and done their acquisition on Friday, and the street didn't react to that very positively. Do you have a view out there? Because it's a group transaction, takes away a lot of their cash, and as such, the stock was trading at premium multiples. Your take?
So the transaction specifically, we cannot talk about that because I haven't published a note on it yet. But overall, LTTS, we like it among engineering services peers because we think that it's a lot more broad-based compared to the engineering services peers. Valuation does limit upside because if you do not look at engineering services as a narrow sector and compare that more broadly with IT services, which also has the same kind of India outsourcing value proposition, then peer group firm LTI Mindtree seems to be trading at a lot more reasonable level if you're looking at it on a PEG basis. And LTI Mindtree, coming to your earlier question, why we like it so much is because we think the combined entities actually have lower business risk compared to their separate firms. And I don't think that is really reflected. I mean, the stock is not done well post the merger, while on our framework, the separate companies rate much lower than the combined firm. I think that as a merged entity, this deserves a premium multiple compared to pre-merger.
Ravi, if someone had time on their side, good morning, Prashant here, right? We're not looking for a quarter, 2 quarters. Is this the right time to start accumulating IT stocks, in your opinion? Slowly, systematically buying into the space? Yeah.
Yes, Prashant, definitely. I think so. I think that we've already started seeing upgrades on the margin front. We had been expecting that margin has a lot of upside in FY24 because the lateral wage pressure, the high attrition, all of that was an issue, especially the first quarter of this year. And we were saying that's not a structural problem, that it'll normalize over time. And we already started seeing that margins are expanding. And all companies still have a lot of headroom in utilization. And as attrition comes down further, we expect margins overall will improve in FY24 as well. So I think that revenue upgrades as well will follow because once we have visibility in the next couple of months, I expect that we will see a lot more revenue upgrades also from consensus. We are significantly ahead of consensus.
Yeah. As the concerns abate slowly but surely, will it lift all boats broadly? I mean, or you think there will be significant divergence between what something does very well and something is down in the dumps? So, I mean, is it more important to have exposure to IT as a basket rather than just getting that stock absolutely exactly right? Go on.
I think you have to really pick and choose a little bit. Okay. It won't lift all boats equally. That's why we try to look at which are the most sustainable firms. Some firms have probably benefited because there was a supply constraint, and at that time I think it was more secular growth across everyone. Now I think this year you can really separate out the growth winners.
In terms of commentary, there was still some caution, right? Whether it's HCL Tech or TCS, both stating that Europe continues to be a challenge. There's some delays in decision making, of clients. Do you think a lot of that is in the price, or are you still cautious on that aspect?
No, I think that, barring a really deep recession in Europe, that if that is sudden, say, next winter, something like that is not yet in the price. But the US recession is definitely in, and that's something that we feel is it's not going to be as severe as anticipated. So in a way, I think the price overall is attractive at the moment. I would say that we should see, overall IT services do well as a sector.
Okay, all right.
Just one more thing. Do you think, Ravi, that ER&D as a space, I mean, we've heard it from other analysts, is more resilient as a theme? I mean, we've got about 3-4 plays here, and stocks were bid up sky high. But is that a theme which is going to be resilient and generally, I mean, faster growth over the next many years?
So I'm not sure if it will be necessarily faster growth because if you look at how we analyzed, say, LTTS, we've not really seen that post-COVID boom that we've seen in IT service spending in year-end. At least for LTTS, it's not really very visible. So we think, yes, there is a long runway of growth possible, longer than IT services, because the exposure to India outsourcing is less, so the offshoring is not as much. There is a longer growth runway, but near term, I think IT services stocks would actually outperform or outgrow the ER&D stocks.
Okay, all right. Ravi, thanks so much for joining in. Clearly positive on select stocks as well as the IT space. Let's see whether that call plays out. But appreciate you, Ravi.